I was supposed to record some of this for the people that wasn't able to tap in, but I catch a little bit of it. Um, Back to this 406, I would consider this to be a level to where cars can be bought, especially if you go into money or it drops down here. Now, it's possible that once we get below this -2, we see a panic sell or over dramatic sell off, and it pushes toward this to where investors or retailers or whoever just pushes the price, tries to bottom it out in order for the spike back to the upside. So anywhere below 406 for Microsoft, I'm definitely saying load up at least for this 414 level. And then, you can let them go once it starts pushing up into supply past 416. And you will look for some type of gap up around here for the price action to reset and for investors to build a new bottom. So Microsoft is definitely on my watch list if it happens to push even lower, because you're going to be getting it for more of a discount. I like to always trade Mag 7 stocks because they're the most liquid. You're going to definitely um, get your money worth on the upside or the downside because the delta moves so nice and smooth. So you get paid, you get in and out of contracts even faster. Some of the stuff that you trade that's way out there don't have a lot of volume. You will see the spread super far apart, probably like $20 or $30 apart, and that makes it hard for you to enter and it makes it hard for you to exit. So that's why most of the time you will see me trading stuff like this, something that has a lot of volume, a lot of liquidity to be able to exit in and out of trades, because it sucks if you got 4 or 5 trades, 4 or 5 contracts, and it takes 3 minutes for all of them to execute. That's that's not fun. So definitely watch the open interest, watch the volume when you're taking entries and exit on contracts, because you want to make sure that the execution on the contract's able to be filled in a quickly way. You don't want to get stuck in those. It ain't fun. So let's watch Microsoft this week and see. I'm hoping for a drop in the price some more, because I would love to re-enter around this 406 and possibly lower and swing it back to the upside. I mean, they had decent earnings, I think. Yeah, so they had decent earnings. So, eventually I feel like somebody should be wanting to load the boat down here in order to get up for a bigger run. Do I look at volume ever on the actual price action or on the contracts? Do to Webull. I use Webull and Robinhood. Let me answer Justin B first. Do I ever look at volume ever? As far as on the charts, no, I don't look at volume. I gotta kind of, I'm not gonna say memorize, but I just kind of watch trades based off of how fast the price action is moving for that day. If I see some type of over dramatic move on the market and everything is just kind of flowing past indicators, I know to myself it's a low volume day. Some of the options contracts might not be moving too well. You might see me take maybe one trade at like 11:45 in Central Standard Time, because I know that's just a day to where the algorithm kind of shifts and contracts move for like 15 minutes. So I rarely check the volume indicator, the volume price action on the charts, if that's what you're asking. As far as the volume on the contracts, I'm always checking for those. I'm looking for a volume on options over 1,000, and same thing with open interest. If I can't find anything, I'm looking for the closest thing to it, maybe 600 and above, because I know throughout the day that volume should increase and get over 1,000 at some point. But if it's down to like 89, 120, 200 on the volume on options, I'm not touching it. It's too big of a possibility for me to get a bad feel and too big of a possibility for me not to make any money off of it. Um, do you think I should move to Webull or is Robinhood better? I think they're both. I think they're both pretty nice. I think Robinhood is better and improving because Robinhood is what I started off with, and then I transitioned over to Webull when I wanted to mess around with SPX and try something a little bit faster. But Robinhood is getting better. They're definitely improving their platform. The fields aren't that bad sometimes if you have stop losses set, if you don't have the appropriate open interest or liquidity on that contract, it'll hesitate on selling. But as far as the execution speed, Webull might be a little faster, just a hair, but it's not anything dramatic to where it should make you switch platforms unless you're just trading like that dude. I mean, other than that, I think you can get in and out pretty fairly easy on either one. And Robinhood is a whole lot more user friendly too. Webull is kind of that transition to where like you move into light speed or something like that. So I think Webull. I mean, I think Robinhood is. I think it's straight. Um, let's look at the Qs because I think Qs they're kind of more adjusted for the actual market as far as tech goes. I think SPY has Tesla in its holding, so you kind of see the price action move different, but Qs are just all tech. So I kind of look at that to see how strong the market is going to be. Um, right now, quite haven't seen it retest supply as close as it was with SPY. So that makes me think, it left room for something like Nvidia news to pop off or something like that. And, we could be seeing a move or a retest back up here pretty soon. So what we're gonna watch for, we're gonna look to see if this area right here is gonna be a level of supply for us. That's what you'll want to watch for here. Watch for the retest. If it breaks above it and wants to retest this level here, yeah. So if it wants to go up here and break out and retest that level here, you still don't want to actually grab calls until you see. Well, for me, I'm not taking calls nowhere up in here. But if you wanted to, you'll look for that break up there and then a retest here before pushing up there. But as of right now, I'll be looking for anywhere in this white box to be resistance on the way back down to retest this support level here. Possibly make a move down here too, because this is going to be a area of consolidation too. Yeah, in here, if the market was to open red and open down here, you can see another gap down. You can see a bounce up here back into rejection. And me personally, I would take puts right there and I watch for the move back down here to retest 484. So if you were to grab calls, this area right here would be your main area to grab calls in hopes that it'll make a move up here and then retest to push up towards this 492 range. Do I ever look at EMAs? I do at times, but they're lagging indicators. I try to take off everything that's lagging, to slow me down. But I do look at EMAs sometimes. I also 8, 21, 34, 50, 100, and 200. But if you were to take calls, you'll take calls here in hopes that it'll come back up here and then retest this supply level up here and eventually fill it and wait for the rug pull back down. So um let me see. these indicators, like the EMAs, sometimes you look at them. Sometimes, like I said, I try to look at straight price action because price action doesn't lag. It's going to show you exactly what the market's doing, and it's going to let me know what I should be watching for, what I should be doing. That's why every day I get up and I type the pre-market analysis out. I'm pretty much telling you guys what to look for. I'm painting a picture of what the price action is doing before it actually does it. So that's why I'm saying if we see an open down here, we're gonna see price action consolidate around here. You're gonna see price action right here, and then you're gonna see a brief gray area right here, and you'll see a move back up here. This is where I would be considering puts, just because I'm looking for a little exhaustion back up here through here. Then if we get a bigger move up here, then I'm definitely taking puts because now I know once it gets up to this level, the price action just ran from here from 484 to 492 in such a short fashion. The price action has to be exhausted going up into here. If it's continuing to move, it's because the market is pushing it up there. But a natural price action, this is going to be an easy short. It definitely, if I see it open from here and push all the way up here, I'm swinging puts. Even if it opens up in here somewhere, I'm looking for exhaustion back down somewhere to 489. So this is how you read natural price action before you go and click EMAs on EMAs, RSI, MACDs, any indicator. What time frame I'm gonna put some? Any indicator that I'm slapping on, I'm not putting anything on until I'm reading the actual price action and seeing what the structure is doing first. What time frame I put? I take all my entries on the 5 minute. I do the top down analysis, and if you're not on my YouTube, check that out. But I do the top down analysis method, and I start from a bigger time frame. And once I get everything straightened out, I plan my entries on the 4 hour on down to the 1 hour. I'm reading the actual candles. So I'm looking at these candles. I go on the daily. I'm watching to see what the candles are doing. So if I see this green overshadowing this yellow, I'm expecting price action to pretty much stay within. So if this is green and this is yellow, then I'm expecting, all right, watch for a break above here or a break below here. Once you get the break below here, then you're going short because you're looking for more price action to be made. Um, Once I figure out what the daily price action is doing, then I'm going down to the 4 hour. I'm looking for um, any type of patterns or any type of structure. So if I was to delete this just to clear out some space, I don't know what these white lines are. All right. So if I was um, on the 4 hour and I'm looking at candle structure right now, first thing that I would see would be all of these are very, very steep, trend lines. So either price action is going to be very, very narrow, or it's going to gap above or below the trend. So I'll be looking at something like this. And I really wouldn't touch this just because the price action is so sharp up here. I really wouldn't touch this, but this would just be roughly what I would be looking at. So then I'll zoom down, and now that I'm getting a little bit more candles, I get more detail. So I can straighten up my actual trend lines as I scale down through the hours. So now I'm down to 1 hour. This entire time, what I'm pretty much doing is I'm formulating my strategy for what entry I'm about to take. Where am I about to go with this? So now we're down on a 1 hour. What I'm seeing is a consolidation between here, 491.92, and I'll say here 487, 488.87, because what's happening is it's pushing below this support level, but it's slowly recovering and it's making a higher low. So once it breaks below it again, I'll say, all right, I'm taking calls up here in regards for it going back up here and possibly up here. Now I'm not holding anything above 491 right now, even if it breaks out. Why? Because it's gonna break out straight into a supply level. And it's going, people may think, all right, it's breaking out, it's finna go up. You take calls right here, and 7 out of 10 times, the price action is gonna get drained back down here, and it's gonna get pushed right back to this level here. So once I get that 1 hour, all right, I kind of got a plan. I'm playing calls back up to 488, possibly looking for 491. Once we get up there, you get more candles, the deeper into the minute charts that you're getting, and now you're just really looking for a play to execute. And I'm watching the price bounce on here, and I'm just looking for either a 488 strike price or a 491 strike price. So that's everything that pretty much go into my decision making when I'm choosing which play I want to where I want to enter, strike price, and all that. I start at the daily and I scale all the way down through the hourlies. I make my entries on the minute time frame. So as of right now, SPY just looks like a bear flag on the 5 minute. You'll see a move up here. You'll see a breakout. You may see it come up here, and you'll see it eventually exhaust itself. You have your exhaustion levels, well, old resistance levels right there. So even if it does break out and push up here, you'll see exhaustion around this level, and then you'll see a move back down to retest and find actual buyers somewhere up in here for another retest to the upside. So that's what I'm saying. Trading is all about, all right, taking the highest probability way and playing it to your advantage. Nobody knows which way it's going to head. You just want to always have a safety net ready just in case your plan doesn't, go through like it's supposed to. I was watching Exxon, and normally when I see tech start getting weak, my first thing is to go to oil and gas or to find retail. So right now, we see oil and gas has, well, Exxon has fell from the 121 levels. After that gap down, it kind of just went downhill. I always, once you see weakness in support, then you can literally go short into supply levels, or just whenever it makes a daily high, you can short it back to the downside and pretty much hold it and allow the price action do its thing. So we've seen little gaps here and there. We finally seen a big strong one right here, and it traded all the way up until it finally broke back to the downside. And then Friday we seen something super, super interesting. We seen a crazy spike up back to 120, and then it sold off dramatically all the way down to 114.98. So as you can see, it's getting deeper in the red, and it's something we're gonna have to watch for. So even if tech, recovers and we get this little mini rally, I think the fact that Exxon is already pushing deeper in the red, we're probably going to see a sector rotation pretty soon back into oil and gas and probably energy and things of that nature, because the money has to funnel into different places once it comes out of tech. It normally goes into oil and gas, energy, and retail. You'll see stocks like, oh, and medical. You'll see stocks like Cost. You'll see stocks like Eli Lilly. I think we've seen Nike pump one day, ExxonMobil, Chevron, Phillips. I think that's the name of it. But you'll see stocks like that start to pretty much push back to the upside, while you'll see tech stocks actually start getting plummeted for the wells to start loading back up. So Apple was another one that kind of had a disappointing earnings also. So um, it's mixed emotions. I think I seen an article on Warren Buffett said he sold some of his shares, which I mean that's what he's supposed to do. Anytime you in profit and you expecting, the market with a little downturn, just like we do, people like Buffett and other people like that, they're gonna take profit on their shares too. So it's not saying that it's anything to be in danger of. I just mean Buffett got in at a good price and he was just ready to take some profit so he can get back in on something else at a cheaper discount price. So as of lately, we've seen prices as high as 237, and now they're low at 223. So over $10 drop. So that's just like Microsoft. Apple's gonna be something that I put on the watch list too. We have a gap down right here, and we have a gap up, an old gap up right there. So just like we saw, I called puts on it because I did want to see this 220 range get tested and fall out, but we saw it accumulate here around that 224 level. So um, we've seen this big level of accumulation. There's the highs, and here's the lows. So we'll be looking for 225.33, and we'll be looking for 221.61. Where's the entry? My entry that I had Friday, I entered around here. I entered around there and I was looking for a flush down here, which we never got because it held up at this 221. So as long as it's trading, as long as Apple's trading within this supply level right here, it's possible that you can short it back down to this 223 level. But I mean, you have to get out because this gap up here is holding the price action up. It may dip a little bit below, but it's being bought back up and it's forcing a consolidation on you. So what we'll probably have to do is look for either intraday strength or weakness or a pre-market gap up or gap down in order to show future direction, or else you will just see this consolidated movement just continue to play itself out until something happens in the price action, a gap up or a gap down, or we see a squeeze in either direction in order to either find more buyers down here or show that the stock has strength and find more buyers within this 227 to 223 range. So I don't have an entry on it right now. I did cut for like a little $25 loss on my contracts, but I would just look for higher highs or lower lows going into this week. You see this wick down here, down to 220.24, which it was bought back up. But I'm not seeing any direction on it just yet. I have to see a little bit more price action move. I had to see some of these levels get taken out, and it's gonna be hard trading with this gap down right here and this gap up right here. So on Apple, I'm just looking for a sideways movement unless we take any one of these levels out. Um, Google, Google had a pretty good earnings. No problem, no. Google had a pretty good earnings. Um, I called the top up here at 181 on the pre-market analysis and said that it looks favorable. That's what we got. If you took up here, that would have been a $10 move to the downside. And why did it look favorable? Just because um I didn't see a lot of strength in this gap up when it actually started, when a price actually opened, on top of the market sentiment being bearish over the past couple of days too. So right now it's possible for it to be a area to load up calls because the gap is filled. We did have a little supply gap down, right there, but honestly, it's all just gonna be based on market sentiment, pretty much. I don't see any prior gaps, and it only gets deeper in the red down here. $10 move to the downside on Google is a very big move. So it normally moves, I think, $3 a day, $2.50 to $3 a day. So I would expect it to retest levels up to 179.8. I look for support here at 170 and 169 and see how that holds up. This deep in the red, it should eventually start pushing back up, but you'll pretty much just have to play support and resistance on him. So I mean, you can map out a level right there. You can map out a level right there, and probably one more like here. And you can play calls back to the upside like that if you want to take the upside on it. So it's giving you three levels right here is kind of your area that you want to kind of stay out either side because you're not really knowing which way it's going to take. All you know is, hey, here's my old resistance level. I'm approaching that now. Do I trim some? You trim it off. Or if you see the spike up to here, then you can see then this level starts to be respected and you can hold and see if Google wants to make more moves to the upside with that also. So it's always a way to look at the price action without indicators. I try to get as many people that I start mentoring with, I try to get them off of indicators first because you want to be able to look at the price action and see what it's going to do, and then be able to tell slap your indicators on next. The GAN fan, that's probably the only indicator that I leave on, and that's because those are actual trend lines that I draw myself using the tool. But it's some pretty good tools out there that do it for you. But using the fan is tricky learning. It took me a little while to get adjusted to, but it's just something that kind of stuck out to me that I can use it along with the price action. I still have to go up every week to readjust these support and resistance levels that you guys see on the screen. But normally I just go, and if you follow me in the beginning when I just used to post trend lines on Twitter or whatnot, you will see, I think just trend lines and price action is always the way to go. Knowing pattern formations and knowing supply and resistance, it'll take you a very long way. It'll keep you from spending a whole lot of money on upgrading services, adding indicators and stuff like that. Um, all you really got to do is just learn to see what the market's telling you and where it's showing you to buy and when to sell. And the historical data doesn't lie. If you read the Stock Traders Almanac, it comes out every year. It pretty much gives you an idea of what to look for or what to expect every month. It gives you percentages. It gives you graphs. It lets you know how the market did during prior election years, how it does with Democrats in office, Republicans in office. The Stock Traders Almanac is a good book based off of historical data to help you go through the market month to month. And to me, candles are the same way. If you know what the old support levels was, then you know if it pushes above that, I can expect a supply and demand flip and see a move push higher or push lower. It just takes patience pretty much. So on this Google, I will be watching, well, yeah, Google, I will be watching for support levels around here and seeing if the lows get taken out or not. If not, then you can expect for this to hold up, and then you can see it push back up to the upside around this 179, it's 180 range. 2 weeks out, it should go into money easily if you're holding like 179 calls 2 weeks out, especially if it dips. Then I would say go 170 and let this area turn into your in the money spot and ride it all the way up back to 180. So day trading is fun. You get the euphoric money from making, you know, 10, 20% moves in a day, taking your profits. But swing trading, that's honestly, that's my first love. And if you take in the right positions and just hold, you can buy 10 contracts of out the money strike prices. And you can pretty much hold those and you can just trim them off. And it just gives you extra buying power in order to it gives you buying power to reinvest in the market also. So um has a few noise coming in, but we're back. But yeah, um buying out the money 2 week out strike prices, well, expiration dated contracts. Once you go somewhere in like 170, 170, 175, it goes into money. It gives you the opportunity to trim some off there and then ride it up another $10 and trim off in the process. So if this was me, I would buy calls around here. I'll probably trim a few in here. I'll hold through this area. Once we get up in here, I would trim off a few more. And then this would be my final take profit, mark right here because we'll be filling up this gap up area where it opened after earnings. So you will be looking for even the investors to ride because it's showing that the price action is strong here, here, and here. So now let's pretty much go on with the ride and we could see it push up to about 185, possibly 194. So as far as Google goes, it looks pretty strong to me. That'd be something that I'll be watching going into the week and looking for actual probably March contracts for my personal self. Just because it looks like right now we're heading into a market for the next 2 months. It looks like that the market's kind of gonna be in the bearish direction just since the 3 month candle on SPY and QQQ is showing bearishly. So um I'll be looking for some longs to go into. And last but not least, I'll do is um Amazon. Okay, so this was this was Thursday, and we seen a huge sell-off Thursday going into earnings. We seen a big earnings pop. I had a price target on Amazon around 204.25. And that's if the market rallied. So as of right now, we're seeing the similar move that we've seen on Google. We're seeing it on Amazon too. So it broke above that 199, briefly touched 200, and it slowly started getting faded back below this 198 where it was retesting and it wasn't holding too well there. So we could see another low of price action down to about this 195, 196 range and see if it holds there. But if the market's continuously being bearish, then it's going to have a similar effect that Google had. And then this little gap down area right here, we're going to see the price action get right there and you will just see it get vacuumed down. because these are where sellers are sitting in this area, and it'll probably vacuum it down up in here, or we'll see a consolidation in there and see what the investors or the market wants to show us as far as what they want to do. So this would just be what I would be looking for as far as the price action goes, but I'm definitely going to be seeing what the sentiment is in the market to see how much lower or if everything's looking to slingshot back to the upside this week. My next entry for calls, if you want to, if you're strong into it, would be 196. Let's see, Monday's open is about right there. So 195.61, that'd be a look for entries. If you're going bullish into it and an exit of 199, possibly 200. If not, you look for this 195, 196 range to become resistance and for the price action to start dragging back down here. Let's see what Fridays. Well, this is Wednesday, so Monday's close will be around here. So if we just completely bottomed out, like Monday's close would be like right there between Monday and Tuesday. So that'll be what I'll be watching for as far as Amazon goes. And we'll just see how the price action wants to float. See if this area right here holds up and if it's gonna push back up to the upside and reattempt these highs after the earnings report. See if it's gonna retest those highs up here, back up here, which I'll still consider this resistance until we get that move up to 205. So anything within this 200 range, I'll consider that resistance or supply until it's proven to be able to hold above this 201 level and spike to that 205 to give us um, a little area to say, all right, investors want to buy in right here. But as of now, look for another rollover here and retest these levels and see what's gonna actually hold. Because the market's definitely giving me bearish vibes. This is SQQ. It's an inverse of the Qs, and I just watched this also. It's kind of a sentiment. As you can see, it's building an uptrend. It rejected up here around 750 each time. And we could see a move back down to $7.36. But as long as this is trading within this little uptrend right here, you can consider this a slow sell-off in the market. Now, SQQ is a inversely leveraged ETF, which means it kind of moves more volatile in a short amount of moves in the price action. I don't think I said that right, but anyway, this moved 50 cents. Q's move like $12. So when I see moves on this or big moves like this back up, I know I can call Q puts because this is going to want to go and retest this. And that's what we saw. So some people buy, short dated to medium dated calls on this when it has dramatic sell-offs. We did see it trading all the way down here when it first decided to make the uptrend down here. But as you can see, we've seen a small little uptrend here before it finally gapped up and it built a kind of a trend right here that's sitting around $7.35. So there's a big gap right here, which is gonna have to get filled eventually. But as of right now, you'll want to play this 735 as support unless we have a gap down, and then we'll see a push reject and a rollover. But until then, I'm still bearish on the market. We're gonna see a couple stocks probably move up dramatically, like Nvidia or something, once this comes down to the 735 range. But as long as it's not gapping down, then I'm looking forward to retest and make higher highs and slowly push up to like the 755 range. Same way it kind of did here. It pushes up So you can kind of look at this like, and it rejected after it attempted. It broke out a little bit and it rejected, but it made support halfway through and it pushed back up. It's rejected again, but it's still trying to push up. So right now we're just gonna have to look for the 745 level and 744 to see if this is gonna be considered a new level of support or anywhere around here. And eventually we'll see a melt to the upside or possibly melt to the downside. But as long as I'm seeing a bearish 3-month candle, I'm gonna keep leaning toward the upside and see if this is possibly gonna retest. Um, I'll say this little area up here because if it does, then we can look for rejection up here and then a relief rally in the market as this trades back to the downside. But if I see it, then I'll call it out and I'll let everybody know what's going on. Um, if you're on after hours, I'll post it up there. So you'll be able to get the alert there. Discord, I'm always posting charts and levels. Uh, Anytime you guys tapping in, asking questions, if I'm free, I get to it. I know somebody said they're just hopping into the top-down analysis method that they saw on YouTube. If you're on my YouTube, like and subscribe and check in with that because I'm doing a lot of stuff on that too. I'm pushing out information and education every way, in every possible way that I can. I don't know it all, but if I don't know, then I'll figure it out or I'll find out a way to explain it better. But I'm always in tune with the people that choose to navigate the market with me. So um yeah, if you're in my Discord, like I said, hit me up if you're interested on the little one-on-one. And when I don't have too many to work with, then I just focus on one or two people, just depending on how the market's handling. And I just send charts back and forth. I talk to you and see how much you know. I try to clean up on whatever it is that you might need help with. And my goal is to help you be able to see the market without me because one day I might not be able to trade that day, but I still want everybody to be safe and be able to navigate everything successfully with whether you're doing it with me or you venturing off doing a little side quest and want to make money on your own. That's cool too. But my goal is for me to trade with everybody successfully and be able to share some of my tips or whatever that I found success in with you guys so y'all can be able to do it too and make as much money as you need. That's the goal here. Us against the market to make as much money as we need. So um you can find me on any of those platforms. Hit me up, let me know. I'm always free to help. This is my passion and I enjoy doing what I do. And I appreciate everybody for tapping in with me and giving me a little time in your afternoon to, talk charts, um, go over a few watch list prices and see how everybody's feeling going into the market. So if you're in my Discord, hit me up. If you want to join, go to my Patreon. Um, Unfortunately, I'm not free. I'm not one of the ones that do it free, but I only charge $10 a month, and that gives you access to my Discord, gives you the option to trade one-on-one with me and things of that nature. I've seen a lot of people improve just from taking the time out to do this. I understand people don't have a lot of money to invest in so many different ways when you're trying to learn this because I've been to the $150 discords, I've been to the $100 Patreons, and some of them I learned, some of them I didn't. But it was money that I had to scrape up because I was new and I was trying to grow an account, but also pay big prices too. But I do charge a little $10 entry, membership thing is all cool, but I make it worth your time. And, my goal is just to keep a small circle of traders that want to learn how to do it in a safe manner and not turn it into the casino. And then people that's looking for longevity in the market and want to build your own 401k, want to build your own nest egg in the market. That's my goal because I've been in the situation that everybody's been in, trying to make extra money and stuff. And this is just what I do in order to give back to everybody because I know this is 6 years in the making. You know, reading the books, crunching in the information, looking at charts, screen time, and all these good things. Like it's a lot. I've been there, Barnes and Noble, all that good stuff. Watching YouTube is stressful. I get it. So, as long as you guys are, around and need my assistance, like I'm always going to be available because this can be draining if you definitely don't know what you're doing or if you're just in that learning phase. I think everybody can learn how to do this. You just need to be around the right people, the right like-minded people, the positive environments, and I think everybody has the opportunity to be able to make it where they want to in this market, whether it's buying stocks and holding on a buy and hold term, whether it's day trading or swing trading. Everybody's going to have a niche in this market, and you just got to figure out what works for you. My job as a teacher or a mentor is to help build the next person that's a better trader than me. If I'm not training you to be a successor of me, then I'm wasting my time because I'm halfway teaching you. I want to be able to give knowledge and create a better trader than I was, and give you guys be able to have the advantage of condensing down that time. So I appreciate y'all for giving me a little time of your afternoon. I'll see you guys in the morning. You guys stay tapped in, stay mentally prepared, and we're gonna go in and we're gonna make this money with whatever the market gives us. So I'll see y'all guys in the morning. It was nice hanging out. Come tap in with the Royal family. I'm out.
Thank you very much for hosting this, man. It's great.
Appreciate you for tapping in too, man.